Welcome to Austin Tech Connect, the official podcast of the Austin Technology Council. Presented to you by Netspend. Homegrown in Austin, Netspend has been a leading provider of consumer and business payment solutions for almost 25 years. From prepaid cards to mobile bank accounts to money movement services, Netspend connects people, brands, and payment products to deliver innovative financial solutions.
Hey everybody, you have come back to another episode of Austin Tech Connect. This is the podcast about the future of Austin's technology community. My name is Thom Singer, and I have the honor to be working with the Austin Technology Council for the last year, and we started this podcast so that every single week we could engage with local leaders to hear their stories of success, to get their business advice on how we can thrive, and to look into their crystal ball about the future of Austin. And today we are joined by Clay Scovill. Clay is the Senior VP of Technology Banking for Texas at Wells Fargo. Hey, Clay, welcome to the show.
Awesome. Thanks, Tom. I appreciate you having me on.
Oh, I'm glad to have you here. And for those of you who don't know Clay, he is really the entry point at Wells Fargo for everything technology. If you're in the tech ecosystem and you're looking at banking, he is where you start. And basically what he does is he figures out everything that a company needs and then brings in the whole team to make sure that Wells Fargo is serving them correctly. He has lived here in Austin for 5 years. He grew up in Pennsylvania. He actually went to Penn State where he played basketball and then went on to Franklin and Marshall College, also in Pennsylvania. But he still plays basketball, even though he is the father of 3 kids. I don't know how you find time to play a little bit of basketball on the weekends, but with 3 kids, that's a lot of kids.
Yeah. The court's in walking distance, so that definitely helps.
Awesome. Well, Clay, thanks for joining this podcast episode. You're also in the process of joining the board of the Austin Technology Council, and so we appreciate your service. Let's start there. Why in the world would you join the board of an organization like ATC?
Yeah, it's a great question. And a lot of it has to do with this and a lot of the other things that you're doing to cultivate the ecosystem within Austin. I mean, I think this is a phenomenal forum, along with the other events and kind of, I know we talked about ATC kind of being the straw that stirs the drink within tech here. I mean, I don't know of another place where you can go and get the quality of people and companies kind of in one place, relatively thinking about the similar things, but kind of that critical mass that's been created and the energy behind it. I mean, it made it a no-brainer for me and for Wells Fargo to try to add some value there. So,
well, I always appreciate the people who are willing to roll up their sleeves, get involved, support the cause, because as we're trying to sort of reinvent and regrow the Austin Technology Council, I say it every single time, we're a grassroots organization, but we can't exist if the grassroots aren't willing to step in the pool and get their feet wet a little bit. So we appreciate you getting involved. We look forward to all the things that we're going to accomplish this year. So you've been in Austin 5 years. Let's go back in the Wayback Machine to when you got out of college. Where did your career start and what led you to Austin?
Yeah, so I grew up in a banking family. My dad is still in banking, so I think I was maybe cursed from the start on this path. I have this card from like 3rd grade. I was like, I'm gonna play in the NBA, but if not, I'll be a banker. So, path one didn't quite work out. So path 2. So my dad was a huge influence on me. He took a different path. He's been in small banks, kind of in the C-suite most of his career, but I kind of learned from him, what I liked and kind of put my own lens on it. So I started in Pennsylvania. I worked for a bank called M&T Bank, which ended up taking me up to the New York City area in 2012, and worked up in New York for about 7 years. So always kind of in and around banking and finance. I took a quick detour in private equity and we kind of learned what I liked and didn't like about all that, and then jumped back into banking, and then moved down here in 2018 with a bank, Regions Bank. So I feel like in the 5 years, I've kind of seen at least one cycle in Austin, right? I feel like, I haven't seen the whole thing, but things have changed a lot even in the 5 years I've been here.
Well, I mean, a lot of things have changed in the last year in banking, right? So I thought it would be fun to have you on the show just to talk about sort of the state of banking, what's going on. I mean, it's been in the news. Everybody's been paying attention. So let's kind of start off with What is it that companies really don't understand about banks, whether it's a small bank, whether it's a mid-sized regional bank or a large bank like Wells Fargo? What do people not understand that you think, wow, every company should know this?
Yeah, I think the beauty of our banking system here, we have a lot more banks than a lot of other countries, right? We have 3,800 banks here, so really there's a bank for everybody. And I think COVID and kind of the events of this year really proved out that there's a lot of merit in matching your size and needs of the company to the bank that you're going to work with, be that a small bank, a mid-sized bank, or a large bank. So I think that part of that is, we have options here. And I think the people that explore them and find the right fit from a relationship perspective and a capabilities perspective, like there's always going to be someone that wants to bank you. And the interview process, and I think pre-SVB, maybe it was more of a default. Maybe I'll talk to Wells and Chase or, the majors and pick one of them. And I think now people are really being thoughtful around, who's my counterparty, who's my relationship, because you don't want to get stuck in a, kind of a crazy chaotic time and not know your banker and what your bank is willing to do for you when things get a little turbulent. So I think between COVID and kind of how this year's played out, everyone is way more focused on who their counterparty is, I think, to a way that wasn't the case before, especially from the deposit side. I think people have learned a lot more about banks, right? Like I think before everyone's like, well, I put my money in a bank and it's safe. But now we're seeing a lot more people dig in around, hey, where's my money actually going? What are you guys doing with it? Really learning the inner workings of the way the system works. And I just think the sophistication and education of the execs and the board has really ratcheted up over the last 3 years, in a good way. It keeps us sharp and it makes sure that we're, the client bank fit, makes sense. And I think the kind of especially this 6 months really has proven that out, right?
Well, it's interesting because you talk about sort of the crazy times and how important it is to know your banker. So I spent a little bit of time, a couple years, doing business development for Wells Fargo, actually working what I think they used to call the Regional Commercial Banking Organization, the RCBO, which I think now is actually the group that you lead here. We didn't cross paths because this was like 15 years ago that I was there. But I learned a lot about the fact that relationship bank is really important, whether it's large or small. So let's talk a little bit about the relationship that a tech company leader should have with their bank. If they don't currently have what they would consider a really good relationship with their banker, what should they be doing to grow that if they're going to stay with that bank or if they're going to shop around?
Yeah, for sure. And I think a lot of it has to do with the education process. When you're asking your banker things, one, hopefully you don't have to track them down, but two, I don't think any question is a dumb question, right? I think people kind of look at a bank as, I ask for something, the bank takes it back, tries to do what they can do, they spit out an answer, right? I think the process can be way more collaborative than that. And I think that goes back to really digging into, what's the ideal structure for you, not just today, but 3 years from now, and really kind of holding the bank's feet to the fire on how do you see this going, not just today, because I think anyone can give you an immediate credit answer, right? A yes or no. Again, it's more nuanced than that. And I think that when you get to the point where you're willing just to pick up the phone and say, hey, Clay, I'm thinking about this. It seems kind of crazy, but like, what's your view on it? And we're having that dialogue outside of, oh, I need capital right now, or I need this right now. Those kinds of things end up getting done, but it's how do I kind of deepen that dialogue to the point where the bank is more of part of your advisory team and you feel really confident on bringing those thoughts and ideas up to the board level and socializing them. And in fact, we've been in front of many boards and prepared slides for those boards. Those are the best relationships, right? Where we're really having to be thoughtful around how all the stakeholders are affected and not just, hey, can you do this for me today? Because most of the time that can get done. Again, I'm always trying to think 2 or 3 years in the future when we're talking to an exec or a board, giving advice on how we think this might play out. So I think not being afraid to have those conversations, because sometimes they're unnatural, but kind of driving your bank to the point where those conversations are being had.
So if someone feels they don't have as close of a relationship with their banker as maybe they should, they're listening to this and they're like, I don't really ever talk to my banker the way Clay is saying I should talk to my banker. What should they do? Just call them up today and just say, hey, I was thinking about you. We should talk a little bit more about my future plans and what I'm trying to do, and schedule an appointment. How should the client drive that relationship if the bank hasn't necessarily done it so far?
Yeah, the joke was always like, bankers come in at 9, leave at 3 to hit their tea time. But the truth is we do like to have more fun, I think, than people think. So, I always think a couple beverages in the mix and having that kind of dialogue. And I don't know too many bankers that don't want to do that. So I always try to get the forum, off the Zoom screen, into more of a setting where you're kind of conversating and not just kind of take the formality off of it. And it might just be, hey, I'm going to get to know you personally first, and then once you kind of break that glass, I do think the conversation deepens quickly. And I know a lot of the bankers in town, and they're all very much willing to go out and have a drink, have a lunch, really try to just strip away some of the, hey, this is a process, and more like, I want to get to know you. And through that, I'm going to get to know the bank and what you guys think that we can accomplish together. Instead, it kind of move it away from a vendor relationship, right? I think that people that look at banks as a vendor, you're always going to be surface level. And we, as banks, need to prove that we're not just a vendor, right? So it's a two-way street, right? Which is important. So, and I think you can see quickly when you start talking to your banker in that way, whether or not they're willing to engage at that level. And I think almost all of them are willing to do that.
Yeah, and I always think it's best when, with all of your vendors and everybody who you work with, if you treat them like partners and bring them into the fold and share more, in the long run, when times get tough, you're always going to have them there. You said something interesting a minute ago about going in and doing presentations with the whole board of directors. Is there a different relationship that the bank has with, like, the CFO and with the board of directors? Should the board know the bankers? How does that work?
Yeah, for sure. I mean, I think it's building that level of trust with your direct contact at the company and having them feel comfortable raising your thoughts to the board level. So I think you really earn the trust of the company first a lot of times. And then once they see the merit to the ideas, I think almost everything that gets done, in our world, especially with capital, needs to be approved by the board. So if we're kind of tying that whole thing together and the management team feels comfortable, right, with raising the major ideas, and then the board kind of can see, okay, wow, I didn't actually realize this bank was willing to work in this way. It's surprising, and I think sometimes we take it for granted that everyone just knows all the capabilities that a bank has. I'm surprised every day when I tell someone something and they say, well, I didn't know Wells Fargo did that. And we want to limit the amount of times that happens. And I think that's why we're I would say a very high touch organization to kind of get to that point where someone's comfortable with us preparing slides for their board, right? I mean, I think that's the ultimate compliment, that they trust in us enough to raise us into that cadence with them.
So Austin has a lot of different size tech companies, right? We have a unique sort of ecosystem here. We have thousands and thousands of pure startups, Bobby and Mary with an idea, maybe grandma's funding, maybe some angel funding, maybe an employee or two, all the way up to we have these giant international companies who employ 500, 1,000 or more people here. And then in between, we have sort of what I call the established growth companies. So with these three different areas of small, medium, and large, early stage, late stage, local, international companies, what should tech companies be thinking about who they are in the ecosystem and where they should be banking? Does that change as a company grows?
Yeah, for sure. I mean, it's a great call out too. We track capital formation by city within our region. We cover the central region of the country. So we look at all the major markets, and we color code the capital raises just based on Is it VC? Is it PE? Is it strategic? Is it M&A? Is it IPO? I love our graph because we always have a nice disbursement of all those colors. To me, that represents a deep and healthy ecosystem. And that's grown a lot over the last 5 years that I've seen, right? And I think when you're thinking about your scale, right, it's two things. Can I become $100 million company on this platform just from a capabilities perspective, right? Because what you need is going to change from when you're a $1 million company, $10 million company. And a lot of banks can scale with you along the way, but is this someone that, when I need to run $100 million through my business, is that the shop that can do it? And secondly, what's their comfort on deploying direct capital? And if they're not comfortable, can they find a way to help me get it? So I think that changes a lot too, right? When you're talking about a kind of an early stage to making a lot of investment in the business, that's why we have all these great kind of venture lenders and also, these non-banks, right, that all play a critical part in that ecosystem. So it's really rare to find one shop that can support all that in every stage. And I think that's why, we've seen the industry, and us included, hire early stage bankers, because that conversation and need set is different. Best case scenario, we scale someone from 1 million and we take it all the way up to 100. Now that doesn't usually happen. There's usually a couple stops in the middle. But just that people know that a bank can do that, and knowing when is the right time. And I think, we also see a lot of times where someone scales through with somebody and the relationship is great. There's just a bigger capital need. We end up partnering with that bank, right? We'll both kind of wrap our arms around that company, and that way they keep the relationship, but then we're able to come in and help with stretch capital and get them the dollars they need, when they're scaling, whether that's just organic or M&A.
So that's interesting, because I don't know, even coming out of a brief stint in banking, I don't know that I saw a lot of that. Is that more common now than it was in the past, where a company that's growing and small might have a dual banking relationship as they're scaling because they have the history and they have the relationship, but they need a larger bank to help with that next stage instead of bumping one? Is that more common that the banks will work together?
Yeah, I think, a couple things, Austin, because of how deep the company set has gotten now and how unique the needs are. I mean, they're like you called it out. There's a deep pool of companies in every stage. So we see that a lot on the capital side. I think historically capital drove that need. Hey, we're kind of capped out at 30 million, but we need 50. Let's do a $50 million deal, and then we'll kind of club it up with the existing bank plus us. But really what's happened this year is the operational business. Now companies and boards are very focused on having a couple banks in the fold, even if there's not a capital need. So we've seen a seismic shift in the way that people are thinking about bringing a second bank in, even if there's not a capital need. It kind of future-proofs things, not only if there is that capital need, but it also disperses kind of the counterparty risk, right? I think that's really what we've learned here in 2023, is that it's not bad to have two banks that you know and trust around something, even if the company isn't quite at the scale where historically that'd be warranted. But that's definitely a conversation. Our clients are talking to other banks. We're talking to people as kind of coming in, being the second bank. That's really become almost the standard now, I would say, in the tech space. You want to have two banks, that you trust around your company. And I think boards are very, very focused on that as well. Not having, all eggs in one basket, I would say.
So one thing I found when I was in Wells Fargo, when I was doing business development, was I was surprised how many companies. Now, you kind of expect it with a startup, someone who's never done this before. They're doing the finances on the back of a napkin. They didn't understand sort of the strategy of banking and long-term banking and thinking through that relationship and what comes next. But I was surprised how many little bit slightly more established companies who maybe weren't at the stage where they had like a high-level CFO yet didn't really think about strategy. Is this something that all companies should be thinking about? Is what is our banking strategy and how does it relate to where we are now and where we want to be in the future? And what can they do to start learning how to create such a strategy?
Yeah, for sure. I mean, look, the honest truth is it's hard to switch banks. There's only more regulatory burden and onboarding burden today than there ever was. So I think companies that are successful and they have a bank they trust, and that's always the path of least resistance. And I think what you've seen is these companies can really scale, with a multitude of providers and be a one bank shop, even if they're at scale, right? If there isn't, and historically that capital need really drove that. But if there isn't a capital need, I mean, you have an operating bank and it works really well, and you call them and they do something for you same day. That's a great relationship, and it's hard to go out and interview banks and takes time. And then you pick one, and then the onboarding process is, with the regulatory environment, just as hard as it's ever been. But I think it comes back to what we first talked about, right? How do you, when I say interview, but how do you kind of get past that surface level and to the point where you're like, yeah, you know what? It is smart to kind of mitigate my counterparty risk. And oh, by the way, these guys actually, I feel confident repping to my board and my management that these are guys that can do it. And here's why. So I think that people are more willing to spend the time. I know, like my personal banking, like I would never think about moving that. It's just it's clunky, right? And it takes time and effort. But I think the payoff in the future, I think, is more important to people now. And so I would just say, look, continue to break that glass with whoever you're talking to, right? Make sure you really know what they can do for you, because I think that the worst case scenario, you do all that work and then all of a sudden you're like, well, hey, we need what you were talking about. And then it's like, yeah, that's not really a fit for us. So really, really finding that fit set is critical if you're going to spend all the time doing it. And then just really eyes wide open, knowing it does take time and it's not natural. And I think we understand that as an industry, and so I think that'll get better with technology and AI over time. So that's kind of my thought about that.
So for Austin specific, it seems like with the traumas that we had this year in the banking world, it seems like Austin fared okay. How are we doing past, present, and future when it comes to the state of banking for tech companies in Austin?
Yeah, the great news is there's lots of options here, right? It's not a one size fits all. I mean, if you're a tech company and you're looking for something specifically, you map out the market, there's going to be someone willing to engage with you, no matter what that need set is. And that's great news, because the companies really drive the coverage of banking. So everyone looks at Austin now and says, we need to have people here on the ground. I don't even think that was really the case 5 years ago when I got here. There's been a lot of banks that have pushed into this market, major banks, venture banks, that are doing a great job. So I think when we're looking at the landscape there, it's actually relatively healthy. I don't think anyone looks at Austin and says we need to pull back in Austin, right? Like, if anything, people are pushing investment in. I think from a company perspective, you look at capital formation and it's down, but that's across the board. You still look at the splits. I'm encouraged by the splits, right? There's still a lot of VC capital coming in here. There's a lot of dry powder. The major private equity firms are very willing to engage here. So from that perspective, I think the companies are nimble. We have a ton of talent here, and there's people figuring out, no matter what their situation, how do we get through this kind of valuation downturn? But the depth of capital in banks here, I think, is at a place where we've kind of set the floor in this market as compared to some of the others. Like, we're not a one-trick pony, I wouldn't say, in a good way. So broadly, I think the ecosystem is doing generally well, considering the backdrop, right? And once the equity markets open up a little bit from a public perspective, I think we're very well positioned to be, some of the first companies that kind of lead that charge back out, as things kind of normalize here.
Nice. Real quick, last question about banking. When I worked for Wells Fargo, Wells did not really have a focus on technology per se. And now that group that I work for is now called the Technology Banking Group. So what has been the big shift in the last, I don't know, decade, maybe less, within Wells Fargo to really embrace sort of these growth-oriented technology companies?
Yeah, we've shifted a lot as a platform. We've been kind of in the market as a tech bank for 12 or 13 years, but initially that was more focused on kind of the very large companies, right, trying to deploy capital and bank those kind of household names. And I think that once that happened, the thesis was kind of proven that this makes sense. This is a space that's not going away, and in fact can be a growth engine for the broader bank. So we have kind of up to the top of the house the buy-in to make the investments here. And the other thing I think that made a lot of sense was our group used to be in our corporate bank. So when we kind of pulled that back into what you're talking about, the RCBO middle market bank, it really created a much more high touch platform and enabled us to really go earlier and talk to companies and work with companies that may have been under the radar or maybe deemed too small when we were kind of in the corporate bank. So that also allowed us to hire additional capabilities and build out a platform that's really focused on the early stage, but then still cover the larger growth and late stage companies. So I think the platform itself has rounded out probably a good bit since you've been here. But kind of pulling that back down into the market made a huge difference.
So looking at Austin as a whole, not so much banking, but just our tech ecosystem, how do you think we're doing, and what do you think the future looks like for Austin?
Yeah, well, the market's matured a good bit, right? You have people that are on their second and third company. You have people that were running public companies now that are advisors at VC firms. I mean, you kind of have this great, I don't want to call it friction, but you just have this kind of constant collaboration. And I think Austin's unique in that perspective, that almost anyone that you really want to talk to, they'll spend time with you, right? I think we have something that I haven't seen anywhere else, that we kind of have this, hey, if you live here and you moved here, we want to pull you into the fold, no matter if you used to run a public company or you're a founder of an A-round company. I think everyone, it kind of looks at it like, hey, we're in this together. Let's build this together. That creates a massive amount of opportunities because that's new company formation, that's new capital formation. So just the depth of entrepreneur and operator here, kind of coupled with the capital community. I mean, we're kind of sitting in this really unique spot. And, I think we've done a good job. And I know ATC, that's kind of one of the goals, is to make sure that everyone has a place where they can meet and trade ideas. Because I do think that's the magic, right? We have all the tools, and how do you keep it feeling small when all of a sudden it's actually really big, from a tech perspective, right? This is now, it's a tier one market, right? And I think it's getting looked at as such. But how do you bottle that magic that kind of got us to where we are? And I think people do a good job of trying to kind of protect that and cherish it. So the culture, I think we keep the culture that way. I mean, all the tools are here from a professionalism and a quality of operator. So I'm very bullish on Austin. We don't have any family here. We're here because we want to be here. So I think, all our chips are kind of pushed in on Austin too. So, and I haven't seen anything, even with all the turbulence over the last 12 months, that really changes my view on that at all.
It's interesting, having lived here 32 years, to hear you say, we're top tier one market. I think a lot of people still go, what? When they hear that, who've been here a long time, but it is true. Austin is a tier one market for sure. So Clay, before I let you go, I ask everybody who comes on the show, I believe that more community, collaboration, and conversations can solve all problems. And I think that's one of the things that we're trying to do with the Austin Technology Council, is find ways to bring people to the table, to have more conversations, to build more community, and certainly to collaborate more. Which one of those three words resonates the most with you and why?
Yeah, I think it's the conversation, right? I mean, I think conversation leads to collaboration. And I've just, again, never seen a place where people are more willing to just spend an hour with you. And those conversations to me are the magic of Austin in general. So I hope we don't lose that where, we get these emails that pop in, hey, I want you to meet this person, and hey, let's go grab a coffee. Just kind of the informal nature that leads to very big formal ideas of this town, to me, is what drives this forward. Because again, we have it all here, and just keeping those chains of dialogue open. So I think that those free flowing conversations leading to those ideas is what really I kind of summarizes what I think the magic of Austin is.
Nice. And then my last question, you've only been here 5 years, but if somebody came to visit you from Pennsylvania who'd never been here before, what's the one place you would take them, whether it's a restaurant or an attraction or a historical place? What's the one thing you would take someone to if they came to visit Austin?
Oh, man. Good question. Probably right now, given how hot it is, Barton Springs is up there for sure.
Good choice on a 103-degree day.
Yeah, for sure. Or a boat on Lake Travis or something. Just, I don't think people realize how much water there is here. I think so. Every time we take someone up to the lake or Barton Springs, they're always ready for the next adventure then.
Yeah. Well, we are an outdoorsy and water-oriented town, and people don't realize that if they've never been here. So
yeah,
good choice. Sure. So Clay, thank you so much for being on the podcast, but even more so, thanks for your support of the Austin Technology Council. I think together, having you on the board, along with some other people that we've added and our longtime board members, I think we're poised for some good stuff in the next 2 years. And so thanks for your help.
No, I appreciate you getting me involved, and obviously think super highly of what you've done here in a short time, and excited to partner.
Well, we got a long way to go. We need more people to join us and roll up their sleeves. So if you're listening, make sure that your company is supporting the Austin Technology Council. We need you, and your voice not being there hurts everybody. So please make sure that you join ATC today. And thank you for tuning into this podcast. We're going to be back every single week with more interviews with people just as cool as Clay. I know you're thinking, how will you find somebody as cool as Clay? But we do it every single week. So please make sure that you've subscribed to the podcast, join the ATC, and we will see you at our next event.
Thanks for listening to the Austin Tech Connect podcast. Make sure your company is a member of the Austin Technology Council and add your voice to the future of our tech ecosystem in Central Texas.